Have you ever noticed some people start with absolutely nothing? No rich family, no special connections, no perfect opportunities, and somehow still become successful, while others stay stuck in the same place for years. Psychology says getting rich from zero is rarely just luck. In many cases, certain mental patterns make some people far more likely to escape poverty, build wealth, and keep growing, while others stop trying.
1. They learn to delay reward. One of the strongest psychological predictors of long-term success is delayed gratification. People who build wealth from nothing often train themselves to tolerate short-term discomfort for long-term gain. While others spend money to feel better now, they become comfortable sacrificing temporary pleasure for future freedom. Psychologically, this creates a huge advantage over time.
2. They stop identifying as poor. Many people stay trapped because poverty becomes part of their identity. They begin thinking, people like me never succeed. That lifestyle is not for someone like me. But people who rise from zero often change their self-image before their circumstances change. Their environment may stay the same temporarily, but their mindset no longer does. And psychology shows behavior usually follows identity. 3. They become less emotionally reactive. People who build wealth often learn how to make decisions without letting emotions control every move. Fear, frustration, embarrassment, rejection. They still feel these things, but they do not let temporary emotions constantly interrupt long-term goals. This emotional control helps them stay consistent while others quit.
4. They develop a high tolerance for uncertainty. Building wealth from nothing usually involves risk. No guaranteed results. No immediate rewards. No certainty things will work. Most people psychologically avoid uncertainty because the brain prefers safety and predictability. But people who succeed financially often become comfortable acting before certainty exists, and that changes everything. 5. They focus more on skills than status. Many people chase the appearance of success, expensive things, validation, looking successful. But psychologically, people who rise from zero often focus on becoming valuable first, because skills create opportunities, and opportunities eventually create money. Their attention stays on growth, not just image. If you enjoy learning the hidden psychology behind success, behavior, and the human mind, subscribe to the channel, because once you understand the psychology behind why some people rise while others stay stuck, you start seeing success very differently.
But knowing these 5 patterns and understanding why your brain resists all of them, that is a completely different conversation. Let us go deeper, starting with the one that sounds the simplest but is actually the hardest to execute. You have probably heard of the Stanford marshmallow experiment. A child is given 1 marshmallow and told, if you wait 15 minutes without eating it, you get 2. Simple test, but the results followed these children for decades. The ones who waited showed higher incomes, better health, and stronger relationships later in life. But here is what most people miss about that study. The children who could not wait, it was not because they were weak. It was because they did not trust that the second marshmallow was actually coming. Kids from unstable homes, where promises were broken, where resources disappeared, they ate the marshmallow immediately, because waiting had never paid off for them before. And this is exactly what happens with money. If you grew up in an environment where money was always scarce, always unpredictable, always gone before the month ended, your brain learned, spend it now, because it will not be here later. That is not a character flaw. That is a survival pattern. But here is the shift people who rise from zero make. They consciously rebuild that trust. Not in other people, in themselves. They start small. They delay 1 purchase. It pays off. They delay another. That pays off too. And slowly, the brain learns. Waiting works for me now. Delayed gratification is not a personality trait you either have or do not have.
It is a muscle, and it grows every time you use it.
Now, the identity shift sounds simple on the surface, but there is a psychological mechanism underneath it that most people have never heard of. And once you understand it, you will see why changing your habits without changing your identity is basically impossible. Psychologist Claude Steele identified something called identity threat. The idea that when information challenges how we see ourselves, we instinctively reject it. Here is how that plays out financially. Imagine someone who has always seen themselves as not a money person. They come across a great investment opportunity. Instead of excitement, they feel anxiety. Imposter syndrome. That is not for people like me. And so they do nothing. Not because the opportunity was not real, but because acting on it would conflict with their identity. Now flip it. The person who has, even quietly, even privately, started to see themselves as someone building toward wealth. They see the same opportunity and feel something different. Curiosity. Even if they are nervous, their identity pulls them toward action rather than away from it. This is why people who rise from zero rarely wait for their bank account to change before they change how they think. And the practical way to start? Stop saying, "I cannot afford that." Start saying, "That is not my priority right now." One sentence keeps you in scarcity. The other puts you in control. Same financial reality, completely different operating system. Pillar 3 is where things get uncomfortable, because emotional regulation is not just about staying calm. There is a specific emotional pattern that psychology has linked directly to financial self-sabotage, and it might be running your decisions right now without you knowing. Behavioral economists call it loss aversion. Psychologically, the pain of losing $100 feels about twice as powerful as the pleasure of gaining $100. This is wired into us. It kept our ancestors alive. Avoid loss. Avoid death. But in modern financial life, it becomes a trap. It is why people panic sell during market dips, locking in losses right before recovery. It is why people never start the business, because the imagined pain of failure feels more real than the actual potential of success. It is why people stay in bad financial situations, because the uncertainty of leaving feels more dangerous than the certainty of staying stuck. People who build wealth from zero learn to recognize loss aversion when it shows up. They feel the panic. They feel the urge to retreat. And then they ask themselves one question: am I making this decision based on logic or based on fear? That pause, that single moment of self-awareness, is worth more than any financial strategy, because all the right information in the world means nothing if your emotions are making the final call. Now, pillar 4, uncertainty. This one is connected to something in your brain that explains why intelligent, motivated people still freeze when it is time to actually act. We are almost at the end. Stay with me. Neuroscience has identified something fascinating. The human brain uses more energy when facing uncertain outcomes than certain ones, even if the uncertain outcome is actually better. Your brain literally works harder to avoid uncertainty than to pursue opportunity. This shows up as what psychologists call analysis paralysis. The more information you gather without acting, the more your brain finds new reasons not to move. People who stay stuck are not lazy. They are often doing enormous amounts of research, watching videos, reading books, taking courses, but never investing, never starting, never committing, because the brain has confused preparation with progress. Here is what people who build wealth from zero understand that others do not. There is no perfect moment. There is no complete information. There is no guaranteed outcome. The move is to set a threshold, not wait for certainty. I will act when I know enough to take the first step, not I will act when I know how it all ends. They get comfortable with the idea. I will figure out the rest on the way. That mindset does not eliminate risk, but it eliminates the paralysis that keeps most people watching from the sidelines while others build. And the last one, skills over status. I want to show you the actual math on this. Because when you see the numbers, the decision becomes obvious. Two people. Both earn $3,000 a month. Person A spends $400 a month on things that signal success. Clothes, gadgets, going out, to feel like they are moving forward. They invest $100. Person B spends that same $400 learning a skill, a course, software, practice time, that makes them more valuable in the market. They invest $300. After 2 years, Person A looks successful. After 5 years, Person B is successful. Person B's skills created a raise, or a client, or a side income. That income, managed with delayed gratification, started compounding. Person A is still at the same income level, now with slightly better shoes. Psychology explains this through what is called positional consumption, spending to maintain or improve social rank. It is deeply human, and it is deeply expensive. The antidote is not to stop wanting things. It is to redirect that energy toward becoming the kind of person who can afford what they want, not just signal that they can. Skills are the one investment that can never be taken from you. They travel with you through every market crash, every job loss, every economy, and they pay compound returns that no stock market can guarantee.
5 patterns, 5 shifts. None of them require a rich family. None of them require luck or perfect timing. They require awareness first, and then practice. The moment you are about to make an impulsive purchase, that is pillar 1 showing up. The moment fear freezes you before a decision, that is pillar 3. The moment you are about to buy something just to feel successful, that is pillar 5 asking you a question. These patterns are running in the background of every financial decision you make. The people who rise from zero are not smarter or more gifted. They have simply learned to see these moments and choose differently. That is the real psychology of wealth. If this gave you a new way of looking at money, subscribe. Every week, we break down the mental side of finance that most channels never go near. Next video, why your relationship with risk is the single biggest predictor of your financial ceiling and how to recalibrate it. See you there.